Good evening and welcome to this month's first edition of Capital Markets. Glad to have you join us. I'm Temple Ashaju. The Purchasing Managers Index released by the Central Bank and the quarterly capital importation data put together by the National Bureau of Statistics for Q1 reflected disappointing numbers, which of course impacted businesses and activities generally, as well as investment confidence, all seen negatively. This reinforces market perception that weakening domestic fundamentals are yet abating. The PMI touched 43.7 reading in April. That's 2.2% below the level seen in the month of March and 6.3% below the no change threshold of 50 reading. And the stock market activity level for the week was mixed, as average volume traded fell 6% week on week to 227.4 million units, while value traded advanced 12.6% week on week to 1.6 billion naira. Despite the losses, the bullish start to the week was enough to sustain the week-on-week appreciation. And of course, activities in the bonds market was, however, bearish, as average yields across benchmark bonds rose on all trading days of the week amid sell-off by investors, while capital market operators maintain optimism on the economy as a result of the budget signing into law by President Muhammadu Buhari. It is expected that rapid implementation of the capital component of the budget could generate enough impulse to effectively lift aggregate demands in the medium term. We'll talk to a market operator later on the show to give us his perspectives on the budget. But before then, let's catch a glimpse of some of the news from the markets.
Nigeria recorded its lowest investment inflows of 140 billion naira in 9 years within the first quarter of this year. This is contained in a capital importation report published by the National Bureau of Statistics. Representing a decline of 54.34% quarter-on-quarter, the total capital importation is explained to have fallen 89.13% since the peak level in Q1 of 2014. The report states that the largest component of capital importation in the first quarter was portfolio investment, which accounted for 38.12% of all capital imported. In the meantime, the decline has been attributed to the effects of oil price crash. The non-removal of the Nigerian Stock Exchange from the MSCI Frontier Markets by Morgan Stanley has brought some positive sentiment to equities. Following investors' reactions to the news, some broker-dealers have interpreted the decision as a vindication of the market.
To us in the market, it's a positive sign. It vindicates the position that the Nigerian stock market haven't done anything wrong as to be delisted. And in a time like this, when IMF says Nigeria is not one of the growing economies in Africa any longer, and the World Bank says Nigeria is not an investment destination that is worth going to, whatever we can get as a positive commentary on the economy of Nigeria or the stock market is welcome.
The NASD OTC has reported a commission income of 259.36 million naira for the financial year 2015. With over 242 million naira generated from the trading commission, the OTC stands strong in net profit of over 61 million naira. These figures crunched at a time when the macroeconomic environment was pressured by low oil prices and scarce foreign exchange. But the managing director, Mr. Bola Ajomale, at a meeting of the shareholders, explained that the approval of the new SEC rules for trading on unlisted shares was responsible for the jump in performance.
It was a very interesting year. The year started with a consistent growth, and then by April, when a rule came out from the Securities and Exchange Commission, it actually drove a lot of transactions into the business, and then from that point on, trading what we observed was trading started being on a daily basis. So we're actually getting trades every single day. Before then, we were getting trades, intermittent trades, maybe 2 trades a week, maybe 2 trading days a week. But from April last year, we saw consistent trades. We saw trades 5 days a week. And we also started seeing an increase in size. So the volumes were getting bigger, the values were getting bigger, people were getting more confident about trading on the platform. And that started from April. And that carried on till the 3rd quarter of last year. By the 4th quarter, there was a bit of a dip in the volumes that were being traded. But we think that the market will surge again as the economy rebalances itself and gathers itself.
Barclays' planned exit from Africa has begun after a sale of about 12.2% stake in South Africa-based Barclays Africa Group. A statement from the Chief Executive, Jess Talley, says the step aims to reduce Barclays' 62% stake in African business. The first part of the 103.6 million ordinary shares was sold for $876 million this week, a process expected to be completed in 3 years. Barclays did not give any details of the investors who took part in the placing, but South Africa's State Pension Fund Public Investment Corporation had said it plans to acquire up to 10.3 million shares of the investment. The company, which trades on the London Stock Exchange, is selling down its stake in Barclays Africa as part of a plan to simplify the bank's structure and shore up its balance sheet. Barclays also owns a 68% stake in a Kenya business. Dar es Salaam Stock Exchange, or the DSC, self-listing processes begins in 2 weeks' time. Tanzania's Capital Markets and Securities Authority says it has approved the exchange's prospectus for an initial public offer of 7.5 billion shillings. The DSE is floating 15 million shares at 500 shillings per share after a delayed approval process by capital market regulators. After a planned roadshow and IPO window of 1 month, a self-listing ceremony is expected to be organized. Stock self-listing is a new drive that enhances corporate governance within an exchange for a sustainable protection of all investors. The Dar es Salaam boards will join its counterparts, the Nairobi Stock Exchange and the Johannesburg Stock Exchange, as the only demutualized markets in Africa.
ChannelsTV.com is your most trusted news website, using responsive design for a richer user experience. Get the latest information as it happens: politics, sports, business, entertainment, health, and more. Access our content on all our social media platforms. To access the world, you only need ChannelsTV.com. The news at your fingertips.
Welcome back. The program is Capital Market and it's coming your way from Channels Television. But it's time now to review market performance for the last 4 trading days of the week. Sentiments remained strengthened at the Nigerian Stock Exchange, with the benchmark index closing positive this week by 2.55%. All other indices finished higher during the week, with the exception of the NSE Insurance Index that declined by 0.78%. The market capitalization was also up at 8.84 trillion naira. Volume traded eased by 24.72% to 910.66 million shares worth 6.4 billion naira and traded in 15,023 deals. Market breadth was positive, with 40 gainers and 25 losers. Tiger Brands chaired the advance's topmost position with 31.68%. Next is Air Service and Etana PLC. Conversely, Portland Paints fell the most by 9.58%, while Transnation Express and CCNN followed suit. Now, the National Association of Securities Dealers generated more than 242 million naira from trading fees and commissions in 2015. From membership fees, over 16 million naira was also raked in. During the week, I had the privilege of sitting down with the chairman, Mr. Olutola Moboluri, who told me how regulatory involvement in the affairs of the platform changed the rules of engagement and impacted earnings.
In 2015, SEC put in rules basically saying that, basically enforcing the law, that unless you're a broker-dealer and so registered by SEC, you cannot deal in securities. That's number one. Two, if you are a registered broker-dealer, you must undertake transactions only on registered trading platforms. And the third rule was, of course, also that all transactions of public limited liability companies must be conducted on a registered platform. Now, that changed, the environment in which securities transactions were being conducted in Nigeria. So now you have a regulated market, or a market in which there are rules and the regulator of the market has access to information on what is going on. That's number one. Two, in the event of a dispute, the regulators will step in. In other words, the investor can have a recourse. Three, the fact that the market is regulated and guided by rules will ensure that people behave in accordance with commercial honor. Therefore, in the year 2015, the rules governing the market became a lot clearer. And of course, we could see that in the volumes that we've done. There is still a problem, there is still a bottleneck, because not every public limited liability company has complied with the law that says that if you are a public limited liability company, you must register your securities with the Securities and Exchange Commission. Many of the companies have observed that rule in the law, in its breach, because they haven't done it. We also know that some people have tried to do it, but are stuck in between, either because they could not satisfy all the documentation requirements, or it takes quite a bit of time for them to assemble those. But we think that once that process is completed, more companies will become available.
Tell us about the domestic and foreign investors' participation in the NSDOTC now.
Foreign investors have not started looking at our own market.
Why is that?
Well, because foreign investors often wait for markets to become seasoned before they get in. But I can assure you that there are companies being traded on the OTC today that many institutional investors and foreign investors are looking at, because they are companies that cannot be ignored. When you look at the performance, the history, the management, corporate governance rules, and things like that, they are comparable to the best that you have on the Nigerian Stock Exchange. So we know that it's only a question of time.
Within the year 2015, on the review with all of the shareholders that you have, talk to us about dividends. Did anything accrue to them in terms of benefits?
I think what we can report to the shareholders is that we don't have a profit to report, but the trajectory of the performance of the company suggests that very soon we will have profits to report, and then dividends will follow. Like I said, we've been challenged by non-clarity of the rules governing the market. Now, with the clarification of the rules and SEC's readiness to enforce the rules as well as the law, we think that we have a great future.
Mr. Olutola Moboluri, the chairman of the NASD O2C platform. But right now, let's quickly take a look at the African indices. We cover the BRVM market, the Nairobi Stock Exchange, of course, beginning with the BRVM, which an index level of 310.3. The daily return yesterday was 2.5%, but we see the week-to-date return negative at 2.6%. Year-to-date, currently looks very, very good at 2.1%. Let's go to Nairobi Stock Exchange. The all-share index there is 145.6 index level. Market was flat on Friday, but week-to-date came in 0.9% negative, with a 0.1% negative year-to-date. In Johannesburg, which is South Africa, the all-share index is also 51,417.4. Yesterday, Friday, the market declined 1%, but the week-to-date return is negative 2.9%. However, year-to-date record stands green at 1.4%. Tunisian Stock Exchange is next from the North African region, with 5,436.0 level. Yesterday was down 0.1%. Week to date looks green, and of course, year to date is northward at 7.8%. The MSCI Frontier Market Index is good at 0.4% in terms of week-to-date performance. And if we take a look at the numbers, we can see on the screen there, it says 0.5% year-to-date. That's the index. Morgan Stanley that changed its decision over the Nigerian market. With all that, we'll be looking at going on another break. But when we come back, we'll be joined by the Registrar of the Chartered Institute of Stockbrokers, who will be talking to us on the implications of this budget that was signed into law yesterday by President Muhammadu Buhari. So stick around and you get some more.
Every day you invite us to your home. Now we invite you to our homepage. Join Channels TV on social media. Hang out with us on Google Plus/Channels Television. Follow us on Twitter at Channels TV. On Instagram /Channels Television. Friend us on Facebook.com/Channels Forum. And don't forget to like our page. That's not all. Subscribe to YouTube.com/Channels Web. To get constant video updates on news and events in Nigeria and around the world, channelstv.com, the news at your fingertips.
Thank you so much for staying with us. Before we get into our discussion, let's make a sense of the NASD and FMDQ O2C's numbers for the week. And we'll begin with the NASD, where the unlisted security index and the market's total value increased by 0.39% to close the week. The USI, closed at 637.73 points as against previous close of 636.20 points. The market capitalization closed at 420.73 billion naira as against previous close of 419.11 billion naira. Volume traded decreased by 12% from 2.75 million units to 2.41 million units, while the total value of shares traded decreased by 73% from 62.36 million to 17.09 million in 525 deals. 8 securities were traded out of the 27 securities admitted to trade on the NASD O2C market, but Foods Concept PLC and Industrial General Insurance PLC emerged the top traded securities for the week by volume, and Friesland Campina Wamco Nigeria PLC emerged the top traded security for the week by value. And a look now at the FMDQ OTC platform, where the June 2019 security attracted 38 deals from investors. We see the value jumping to 3.8 million naira for yesterday, Friday alone, at a price high of 110 naira 5 kobo, and the lowest price we see is 109 naira. For the March 2036 security, that's the federal government bonds there, we have 33 deals and a value of 4.1 million naira. Of course, the highest price seen so far on that instrument is 94 naira 5 kobo, and the lowest is 93 naira 20 kobo. That's what's been seen so far. Of course, if we look at January 2026, 18 deals were recorded against that security at the value of 2.9 million naira. But the total deals seen on that market yesterday was 154, and the total value is 18.76 million naira. Now, it's a relief for investors as the 2016 medium-term expenditure framework, one of the factors dragging investors' confidence in business activities, yesterday was signed into law by President Muhammadu Buhari. Now, capital market operators are expecting this game-changing development to open perhaps a floodgate of liquidity. The Registrar of the Chartered Institute of Stockbrokers, Mr Adedeji Ajadi, joins me now to share the expectations that he has on this budget with regards to the capital market, fixed income equities. But thank you so much for joining us. Thank you for coming through once again. It's always good for us to have you on the show.
Thank you, Tempo.
So talk to us about the budget. What are your expectations with the fact now that it's been signed into law by the president?
All right. Let me just first of all say that it is heartwarming that the budget was finally, signed by the president yesterday. And that immediately gives some level of confidence, some level of expectation as to what will likely happen. The budget haven't been passed now and signed. What I see it doing is that it will spoil a lot of activities in the economy. It's very heavy on infrastructural expenditure. I know the president said that about 350 billion immediately should be injected in capital expenditure. So you see a lot of construction activity, a lot of infrastructure development. And the impact of that will be to generate more employment. And as you generate more employment, people have disposable income. Companies also then need to provide services and goods to these people who have the money to spend. So the ultimate impact is that it will impact positively on the corporate organizations, on their profit. And it will generally spur the economy on. That should be what will happen.
What are you expecting to do to the stock markets?
Of course, when companies are making money and the market is vibrant, people will then get more interested in the capital market. Not just the capital market, even the overall economy. There will be a lot of activities, and then it will impact also on the capital market.
Some analysts like you have stated that it is not likely to impact on the states because we now have the TSA where all the federal income from all the federal entities, go into. And so it will be difficult to, get businesses done, investment done at the state level. Do you agree with this or not?
Well, not exactly. I know that a lot of states have challenges at this point, but one thing is that once there is injection into the economy, it is still the economy. Whether it is at the federal level or at the state level, there will be an overall impact on the economy as a whole. I know even the president was saying that, look, they will even support the states a little bit more now because they see that the challenges are still there for a number of the states. So with the budget being passed, outlets and opportunities are there for federal government to even further support the states to be able to ride through their challenges at those times. So for me, if you inject the kind of money we are talking about in the budget for this year, into the economy, there is no way it will not spur activity and growth in the economy. So I see a positive impact on the GDP, positive impact on the corporate results, and then people will be more interested in the capital market.
Okay, so let's take a look at the activities taking place in the under the umbrella of the CIS, the Chartered Institute of Stockbrokers. We recently had Mr. Oluseyi Abe, confirmed as the president of the institute. Can you tell us more about this? What were the procedures that he went through to get confirmed? Oh,
okay. On the 26th of April, we had our AGM as an institute, and immediately after that, we had the council meeting. It is the council of the institute that actually elects its new principal officers. Mr. Seyi Abe, incidentally, had been the acting president for about a year before then. There are procedures, even to become a principal officer or the president. The procedure first is that you will pass through the nominating committee. The nominating committee will vet your application to ensure that you meet all the eligibility criteria. After that, usually we support continuity. So it is expected that the first VP usually will be the next president, but it is not automatic. The council still has to ratify and elect formally whoever is the first VP. So that was done at the council meeting, where he was finally confirmed as the president and chairman of council. Let me also mention that Mr. Adedeji Koje became the first vice president, and then Mr. Tunde Amolegbe became the second vice president of the institute. Okay, so we know that the CIS actually has a lot of strategies, initiatives in place. One of such is to synergize with the Nigerian Army to take the CIS professional diploma course to them. We will be seeing all of this unfolding going forward now that there is a precedent in place? Yes, absolutely. I'm sure Mr. Abe and the team and the new team, they are energized to do a lot more. This actually started since about a year or two ago. The CIS professional diploma, we've been promoting everywhere. We've gone to several universities, and we're about to even start that course in some of the universities that we are working with. So the arrangement with Nigerian Army is similar. We are going around to market the CIS professional diploma in securities and investment, because it's a very, very important program for the capital market, for literacy, for better understanding of the capital market in Nigeria. So this we are doing for the Army and other similar institutions. So we are not limiting ourselves. We are going everywhere across this country, because we are a major driver of the capital market literacy campaign of what that the SEC is driving as part of our overall master plan. So CIS is a major arrowhead of the literacy campaign, and we are doing that with everyone. The Nigerian Army is very, very supportive, and actually they have embraced it. So we see a lot more of activities in that area. Thank you so much for coming through. Unfortunately, time won't permit us to talk about all the things that we've outlined to be discussed on the program. But let's look at next week, viewers. We're going to have the DMO auction for 15 billion naira, 40 billion naira, and 50 billion naira come Wednesday next week. How this will impact on the market, we'll be watching out. But that's the show for tonight. I'm Temple Ashaju, and if you have some comments, leave it for us on Twitter. I remain your host. See you next time.